12 reasons having business credit is a must for every successful company, and how not having it can be disastrous for your business. Business credit is credit in a business name that's linked to the business's EIN number. This is credit a business owner can obtain that is not linked to their Social Security number. When built correctly, the Social Security number isn't even supplied on the application, meaning there is no personal credit check to obtain this kind of EIN credit. When you apply for something such as an auto loan, the lending institution pulls your personal credit using your name, address, and Social Security number. This information is sent to the consumer credit reporting agencies, and they supply the lender a credit report with all information they have relating to someone with a similar name, address, and Social Security number. With this type of credit, an inquiry is then put on your consumer credit report, and your report is used to make the lending decision. Plus, the credit you obtain will then be reported to the consumer reporting agencies. When you apply for something such as a business loan, the lending institution pulls your business credit using your name, address, and employment identification number, or EIN. This information is sent to the business credit reporting agencies, and they supply the lender a credit report with all information they have relating to a business with a similar name, address, and EIN. With this type of credit, an inquiry is then put on your business credit report, and your business report is used to make the lending decision. Plus, the credit you obtain will then be reported to the business reporting agencies. It's important to note that when you apply for financing and credit using your business credit, you should not supply your Social Security number on the application, even though it will be requested. When you do this, no personal credit can be pulled because the lender can't pull your personal credit without your SSN. This forces them to only pull your EIN credit as you supplied your EIN, not your SSN. This means you will be approved only on the merits of your business credit report. Your personal report isn't even reviewed. So what benefits does having business credit truly provide? One major benefit of business credit is that it has no impact on the business owner's personal credit. When done properly, business credit is obtained without the Social Security number being supplied on the application. This means there is no credit check from the business owner to get approved. This also means that anyone who has bad, even horrible personal credit can still be approved for business credit. Another benefit is that business credit has no direct affiliation to personal credit. Business credit reports to the business credit reporting agencies, not the consumer reporting agencies. As business credit is used, it has no adverse impact on the owner's consumer credit because it's not reported to consumer agencies. This means utilizing the account, even over 30%, won't have any adverse impact on the personal credit scores. And there are no inquiries on the personal credit when you apply for business credit as long as you don't supply your Social Security number. 10% of your total consumer credit score is based on inquiries. So if you are using your personal credit to apply for business loans and credit, your scores will go down as a result of those inquiries. Plus, those inquiries can remain on your credit for an extended period of time, affecting your ability to borrow more money. Some unsecured business lending sources won't even lend you money if you have 2 inquiries or more on your personal credit reports within 6 months. 30% of your total consumer credit score is based on utilization. So if you use your personal credit to get credit cards for your business, if you use those cards, you will lower your scores. Using more than 30% of your limit will result in a score decrease. So if your limit is $1,000, having a balance above $300 lowers your scores. This means 40% of your total score is damaged just by applying and using the credit you obtain using your consumer scores. With true business credit, 0% of your score is affected. Business credit scores are based only on whether the business pays its bills on time. As a result, a business owner can obtain credit much faster using their business credit profile versus their personal credit profile. Personal credit scores are based on 5 factors. Payment history makes up 35%. Utilization, 30%. Length of credit history, 15%. Accumulation of new credit, 10%. Credit mix, 10%. Dun & Bradstreet's Business Paydex score, in contrast, is only based on payment history. Here's a breakdown of how your Paydex score is calculated. Expect payment may come early gets you a score of 100. When payment is prompt, your score will be 80. When your payment comes 14 days beyond terms, your score will be 70. When your payment comes 21 days beyond terms, your score will be 60. When your payment comes 30 days beyond terms, your score will be 50. When your payment comes 60 days beyond terms, your score will be 40. When your payment comes 90 days beyond terms, your score will be 30. When your payment comes 120 days beyond terms, your score will be 20. Consumer credit scores are made up of 5 factors and take years of well-disciplined borrowing to get really good scores. Business credit scores are mostly based on payment history, so as long as you pay bills as agreed, you will have an excellent score. And it only takes 2 to 3 reported accounts for you to establish a score, and most vendors have your account reported to the business reporting agencies in 30 to 90 days. This means you can build a business credit profile and have an excellent credit score in a very short time period. With consumer credit, someone has to have permissible purpose to pull your personal credit. Basically, they must have your consent to review your reports. Only certain institutions, such as banks, auto dealers, mortgage brokers, and other licensed to lend money and approved for credit pulling capabilities, can pull your consumer credit report. But with business credit, this information is made public, which means anyone who wants your business information can easily and cheaply get it. Think about some of the people who can see your report as they wish whenever they want. Customers, clients, suppliers, others who you might do business with, competitors. Here is some of the information they can easily see about your business. Amount of trade lines, payment experiences, credit scores, high credit limits, past payment performance, employees, revenues, and much more is available to anyone who wants it. Pull your own credit reports to see what others are seeing about your company right now. Would you want to do business with a company with a similar profile? What does your profile say about you? Are you established? How will your customers, clients, even competitors think about you with this information? Keep monitoring your reports regularly to see what others can see about you. And keep building your business credit so you can have a credible image portrayed for anyone who wants to see your credit in the future, especially those who lend money or issue credit. When you put your Social Security number on a credit application, you are almost always providing a personal guarantee. This means you are personally liable for your business debts. So if you were to default on one of those obligations, the creditor will pursue your business assets first, then they'll come after your personal assets, including your home, your cars, your stocks and bonds, your bank accounts, and any and all other assets. Business owners don't expect to fail, but unfortunately, 90% do fail. It makes no sense to put you and your family's financial future in jeopardy when you know going in that you have a 90% possibility of ruining it. Remember, many times the reasons a business might fail have nothing to do with you or things you can control, such as shifts in the economy. So don't risk it all if you don't have to. There is no question starting and running a business is risky. This is why most conventional banks make it so hard to get a loan. So don't use a personal guarantee unless you have to. With many business loans, you will need to, but with credit, you don't need to as long as you build business credit. Anyone who has sold or bought a business will tell you of the importance of business credit. Now that you know how easy extensive credit and financial information is to get for a company, if you were a buyer, wouldn't you get it? Would you want to buy this company from what you see on the business report? Is the company established? Do they pay their bills? Do they look like a successful company? If you could choose from 2 companies to buy that were the same in every way except business credit, which one would you buy? The one with a very limited or no credit profile? or one with a credit profile that reflects good payment performance, and one with available credit. Business credit is essential in getting a good evaluation of a business. When a business owner applies for financing or credit, their business credit is reviewed. Not having business credit established will get an owner declined for financing. But there is no Fair Credit Reporting Act in the business world that requires those who review your credit to notify you that they did or that it was used in their lending decision. So even though it's always reviewed, most business owners have no idea that it is. Another benefit of business credit is that it more than doubles borrowing ability. You already have consumer credit. Now you can have a whole other credit profile with business credit also. This means it's the only way to get multiple Staples cards, Office Depot, Lowe's, Walmart, Target, and so on in most cases. When you have access to more store and cash credit cards, you also have access to a lot more usable money. Plus, per SBA business credit limits are 10 to 100 times that of consumer limits. Obtaining business credit radically increases your available credit as a result. An average Staples card limit on the consumer side might be $3,000, but in the business world, it might be closer to $30,000. Businesses have a need for higher limits, and higher limits they get with business credit. This is another reason it's very hard to scale a business using personal credit only. Business credit can be obtained very fast. You can get approved for initial vendor credit to help your business grow within 1 week. That credit will typically report within 30 to 90 days. Once reported, you will then have reported trade lines, which in turn give you an established business credit profile and score. Once your profile is established in 90 days or less, you can then start getting real usable revolving store credit cards. Within 120 to 180 days, you can then get real cash credit such as Visa, MasterCard, Discover, and American Express credit you can use anywhere. Business credit is perfect for startups. Most conventional and private lenders won't lend to companies without financials and who have been open 2 years or more. The most popular cash flow type of financing requires 1 year in business and steady revenue. Most consumer credit card approvals are based on personal income. But with business credit, even a startup can get loads of new credit without any of these items. Business credit is perfect for businesses who don't have or want to show financials. Let's face it, we write off all expenses in a business we can. This leaves a smaller net profit, which is what most lenders and investors look at most. Business credit doesn't look at financials or bank statements. A business even with no cash flow can be approved for high-limit cards, helping them grow their cash flow. And tax returns aren't looked at either, so even if the business shows a loss, they can still be approved. Most business lending requires collateral. This is because most businesses fail, and the risk of repayment of lent money is very high. This is why most conventional lenders make it so hard to get money. They aren't set up for this type of risk. This is also why SBA requires all business assets and even personal assets be used as collateral. Business credit is one of the only ways to get money without providing collateral to offset the risk. 90% of the general population knows nothing about business credit. Now that you do, you have a huge competitive advantage. It's much easier to grow a business with access to credit. You can test advertising easier and make some mistakes without risking it all. And you can do this without putting your personal finances in jeopardy. Every highly successful business in this country has business credit. Most of these companies used their business credit to get as big as they are today. Take a look at how many Experian trade lines some of the U.S.'s top companies have now. Facebook has 40 business credit trade lines established to date just with Experian. Microsoft has built 131 trade lines with Experian so far. Apple has 138 trade lines reporting to Experian. And Walmart has a whopping 513 trade lines. 80% of the cash injection into Walmart actually comes from business credit. They are a shining example of the kind of massive success you can have using business credit to grow your business. Contrary to what many believe, business credit is not only for big companies. Any company can build business credit. Big companies are typically the ones who enjoy the benefits of business credit the most because they have CFOs who know how to obtain and use business credit, where most small businesses don't. But you absolutely can get your hands on the exact same credit these larger companies have if you know the formula to obtain it. It's okay not to have business credit because you don't know about it. But once you do know about it, steps must be taken to build the company's credit profile. Just like a consumer with bad credit often doesn't rebuild their credit as they should, and they just get by until they eventually need a home or a car. No business can succeed long-term without building their credit. Plus, it's just much easier to grow with credit than without it. Let's take a look at the actual business credit building process. A business credit report can be started much the same as a consumer report commonly is, with small credit cards. The business can be approved for small credit cards to help them build an initial credit profile. These types of initial cards in the business world are commonly referred to as vendor credit. Net 30 terms are common with most vendor credit sources. This means they will give you credit on net 30 terms, giving you 30 days to pay the bill you owe in its entirety. Some companies will require you buy their products while others won't. Some companies will have you pay for your first couple of orders. Others won't. Some companies report your credit very quickly. Some don't. Look out for all these things when applying with vendors. Some of the most popular vendor sources include Uline, Laughlin and Associates, Quill Office Supplies, Reliable Office Supplies. You will need a total of 5 payment experiences reported to start getting revolving store credit. Don't apply for store credit with no payment experience, no score, and no profile, or you will get denied. Most major retailers do offer revolving business credit. To get approved, they will want to see that you do have established payment experiences, an established credit profile with at least 1, preferably 2 reporting agencies, positive credit scores with the reporting agencies that your credit is being reported. Some starter revolving accounts include Radio Shack, Lowe's, Home Depot, Staples, Office Depot. Most major stores do offer business credit even though they don't promote that they do. So once you have followed the steps outlined here, you can start getting credit with these major retailers: BP, Chevron, Walmart, Target. These stores also offer business credit: Amazon.com, Best Buy, Nordstrom's, Sam's Club, Costco, and many more. Check out some other stores that offer business credit. Here you can see a lot of retailers, all of which offer business credit revolving accounts you can secure for your business. Once you have a total of 10 payment experiences, you can then start getting approved for cash credit sources. It's also recommended that you have at least one account with a $10,000 high credit limit so your cash limits are as high as possible. You can even contact us if you do have good personal credit or have a partner who does to get unsecured credit, in which approvals are based on personal credit but report to business to help expedite your time frame to get to cash credit. Contact us today to learn more about how you can get business credit for your business.